Welcome, everyone. This is Gary Carpenter with Prepare for College. And as I always say, that's prepare the number 4 college.com. And today we're going to talk about educational tax credits. And these are credits, they're not deductions, but they're credits that could be available to some families out there. So I'm myself, Al Hoffman, and Chuck Moore are all going to contribute to this. And we're going to start out right now with Al. So, Al, I'll pass it over to you.
Actually, I'm going to throw it back to Chuck there. He's got a couple of intro things to say. So
I
Okay,
apologize. I screwed up there, folks.
that's all right.
that's all right. We got you covered.
There you go. Now, the educational tax credit is a program from the IRS that can help individuals reduce the amount of taxes owed on their federal income tax return if they have some type or qualified educational expenses for college that they paid. Now, these credits will help families lower their tax liability and potentially receive a refund just for sending their child to college and paying for things like tuition and qualified fees, qualified books, and things along those lines. Now, before we get in depth on this, I want to go ahead and explain to you what a tax credit is. Now, a tax credit directly reduces the amount of taxes you owe. That is very unlike a tax deduction, which only lowers your taxable income. So a tax credit is much, much more favorable, and it will reduce your tax bill down dollar for dollar. If you owe $2,000 in taxes, for example, and you qualified for $2,000 worth of tax credits, your tax bill then would be washed out and your tax liability would be zero. Now, when we're dealing with educational costs, there are two main tax credits for college expenses. One is called the American Opportunity Tax Credit, and the other one is called the Lifetime Learning Tax Credit. Now, the American Opportunity Tax Credit is for students in their first 4 years of college, and it's worth up to $2,500 a year per student per year. Now, to qualify for this tax credit, the student must be enrolled at least half-time in a degree or certification program. The student can't finish 4 years of college. After the first 4 years of college, they cannot take the American Opportunity Tax Credit. The student must not have any type of felony drug convictions. And persons claiming the credit, which normally is the parents, must meet income guidelines and file a federal income tax return. Now, what is covered? To get the American Opportunity Tax Credit or the LLC, which is the Lifetime Learning Tax Credit, it will cover tuition, qualified fees, qualified books, and qualified supplies. That is required by all students attending that particular course study. Now, what does it not cover? It does not cover room and board or other miscellaneous expenses. Now, the tax credit, the American Opportunity Tax Credit, has a refundable feature involved into it. And that is 40% of the credit up to $1,000 is automatically refunded. In other words, let's assume you owe zero federal income taxes. Therefore, when you claim the tax credit, you're going to get at least 40%, which is guaranteed refundable. Now, that means even if you don't owe any taxes, you can still get money back from the IRS as long as you paid for qualified expenses. Now, I'm going to turn it back over to Al here, and he's going to go in and cover some of the key factors of the Lifetime Learning Tax Credit and give you the difference between the American Opportunity Tax Credit and the Lifetime Learning Tax Credit.
Well, thank you, Chuck. Lifetime Learning Credit, LLC. Key facts around the case is it's worth up to $2,000 per tax return. not per student. Big difference now. It covers 20% of the first $10,000 you spend on qualified educational expenses, and you don't have to be enrolled half-time. Even one class qualifies. That's a really big change. No refund in the two programs. No refund if you don't owe taxes. So you can see right there, there's some key facts that are in stark difference to the AOTC. Okay, the features, the max credit, again, let's just kind of put these side by side, so to speak. The max credit is $2,500 per student in the AOTC and $2,000 per return for LLC. I know this is going to get lost in the sauce here real quick, so if you're taking a little bit of notes on this one, you might want to just actually listen to this recording again. The next one is refundable. Yes, up to $1,000 on the AOTC, but no refunding on the LLC. Enrollment required half-time for AOTC, no minimum for the LLC. Years of eligibility, 4 years per student, and the LLC is unlimited, which means you 45 or 50-year-old that want to go back to college, yes. Going to get them LLC assistance. So covers graduate school, no for the AOTC, it's just your undergraduate, and then yes for the LLC. A little bit of a little cross-checking situation. You can see that these are two very different tax credits. Gary, you want to chime in here a little bit on some of these?
Sure. I'd like to talk a second about qualified expenses. Now, when you're talking educational tax benefits, there's different expenses that qualify for different deductions or credits, but we're just going to talk credits today, okay? So you have to have what's called qualified educational credit of tuition and required fees. So when you look at the bill there and you've got $10,000 in tuition and you've got $1,000 in required fees, you've got $11,000 worth of qualified expenses there. Also, books, if they're required for the course, they are also part of the qualified expenses. So that could be another item. Go on to my example I just set there. Let's say we have $1,500 in books required. So now you have qualified expenses of $12,500. You far exceeded the required numbers, but those are the key items. Tuition and fees, fees that are required, books that are required for the course also. Room and board's not included, transportation is not included, the cost of a computer is not included, only those two items. Now, a lot of students are going to take educational loans, and parents will too. If you take a loan is considered payment by the parent or the student, whoever is taking the deduction, for these qualified expenses. So let's say you have a situation where you get a $5,500 federal student loan for the student. That's considered payment of higher education expenses. And as long as that loan is not limited to certain expenses, you can say I'm allocating it to tuition and fees. And for the American Opportunity Tax Credit and for the Lifetime Learning Credit, that's a qualified payment you've made. Now, who can deduct these? Excuse me, who can deduct these credits? Normally, when you have a parent who has a student as a dependent, the parent's going to be able to take the credits on their tax return if they meet the income limits, which we're going to talk about in a few minutes. So, parent can take up to $2,500 in a lifetime learning credit. In an American Opportunity Tax Credit, and up to $2,000 in a lifetime learning credit if the student is considered a dependent of the parent. Now let's go one step further. Let's say the parents are not involved and the student is filing this tax return. Okay? Then the student can take the American Opportunity Tax Credit within the limits and the Lifetime Learning Credit within the limits. They cannot be taken as an dependent on another person's tax return. They had to be fully independent. And in that situation, they could take the credits. So let's talk about the claims, claiming the credits. Normally, the parents are going to take the credits. And that is because the student is a dependent on the parent's tax return. So when it comes to the American Opportunity Tax Credit, the parent's going to be able to take the full benefits of that credit. If it's a lifetime learning situation, the parent would take the benefits of that credit also. Now, in certain situations, a student is going to be considered independent for tax purposes, meaning they're filing their own tax return. They are not being taken as a dependent on someone else's tax return, and therefore can take advantage of these credits. Now, there is one certain limit that is not imposed upon parents. If the student is taking the American Opportunity Tax Credit and their tax bill does not exceed the $2,500, a parent could normally get up to $1,000 in a refund. But as a student, they cannot get that. So they can only take the credit when there is a tax liability available. If the tax liability is $3,000 and they take the American Opportunity Tax Credit, they can take the full $2,500. If the tax bill is $2,000, they can only take credits up to $2,000. Now, one of the things you need to realize is that there's a phase out of this credit. And what I mean by that is once the family, and we'll talk about the parents right now, once they meet a certain dollar amount in adjusted gross income, they start to phase out the credit, the amount of the credit. So if you have a parent that's single, that credit starts to phase out at $80,000. If the parents are married filing jointly, that credit starts to phase out at $160,000. Now, the credit is completely gone once that married couple reaches an adjusted gross income of $180,000, and completely gone for that single parent filing a single tax return. Once they reach $90,000, you can't take the credit. Now, here's a little side note. If you're married filing separately, you can't take the credit at all. So again, that's the one area where if you file married filing separately, you have no benefit of the credit. Just keep that in mind. So let's see what else we have here. I think the most important thing is that you want to determine what their adjusted gross income is and how it's going to apply to these phase out limits. So I'm going to go over them real quickly again. If you have an adjusted gross income of $80,000, you can get the full benefit of the credit if you're filing single. Once your income gets above $90,000, you can take no benefit of the American Opportunity or Lifetime Learning Credit. If you're married filing jointly, you can take the credits up to $160,000 of adjusted gross income. Once your income exceeds $180,000 as adjusted gross income, you're not going to be able to take any of these credits. Chuck, I'd like to pass this over to you for a second.
All right, let's look at some of the common mistakes to avoid. One of them, trying to claim both the American Opportunity Tax Credit and the LLC for the same student in the same year. You can only pick one. Claim credits for expenses not paid during that tax year. Another one is using the tax credit for expenses already covered by tax-free scholarships and grants. So therefore, if you've got a scholarship and you designate that scholarship to pay for tuition and fees, required books and supplies, and you want the scholarship to be tax-free to the student, you cannot take the Lifetime Learning Tax Credit or the American Opportunity Tax Credit. Another one is forgetting to coordinate with 529 plan withdrawals that are tax-free. You can't double dip according to the IRS. In other words, if you use any tax-free benefits, scholarships, grants, tax-free 529 plan withdrawals and things along those lines, and use those to pay for the qualified expenses under the American Opportunity Tax Credit and the Lifetime Tax Credit, you cannot take either one of those credits. So those are the four main mistakes that we see commonly whenever we're dealing with individual clientele as well as talking to accountants and CPAs. Gary, I'm going to turn it back over to you, and you can cover how to file the educational tax credits.
Now, this is a really exciting part of this whole situation. Okay, I'm going to throw some numbers out to you, but again, you may want to have some professional tax advice when you go to complete these items. The first one is IRS Form 8863, and that's a form that you attach to your tax return, and you give the general information about the institution where the student goes, their social security number, the dollar amount as far as qualified expenses, and also what your taxable income is in. Now, where do you get this information? Well, the student is going to get what's called a 1098-T, and that comes from the institution they go to school in. It's going to give the total qualified expenses, and it's going to give the total grants and scholarships that they receive. And again, this is where you can start to identify, do I have enough qualified expenses in order to take this credit in the first place? Do you file the 1098-T? No. The only form you're going to file is the 8863, and most of the information on that is going to come from the 1098-T that the college sends to you. Again, I can't emphasize enough, keep good records, okay? If you're going to have some qualified expenses, show where you paid them or where you took a loan for them to pay for them. Now, a case study. Let's just do it real quick, okay? We've got qualified expenses of $5,000 under the American Opportunity Tax Credit, and they have a tax bill of $2,000, okay? So you go ahead, you file the 8863. It turns out that you have qualified expenses of at least $4,000, and you're going to get the full $1,500 credit. Now you have an additional tax on top of that, and that part two of the American Opportunity Tax Credit, which is a refundable portion to you. You're going to take $500 of that and wipe out the balance of the taxes. Then they're going to send you a check for $500 for the balance where you had no taxes left. Now, let's look at the lifetime learning credit. That's a little bit different, okay? Let's say you have a situation where a parent's going back to school, or even a student for that matter, and they're only taking one course, and they've got $2,000 in qualified tuition, okay? Well, remember, you need to have $10,000 before you can get the full benefit of the lifetime learning credit. So in this situation, we only have $2,000. And what we do is we take 20% of that $2,000 in qualified expenses, which is the tuition, and the individual can take a $400 credit based on that general information. So it's a little tricky, a little complicated. Again, look for some professional help on this as a tax advisor, and they should be able to walk you through this if you provide them with the correct information. Al, I'm going to pass it back over to you.
A couple of planning tips. By the way, as a backup to what Gary said there, a couple of these last DIY things that we do, these podcasts, you'll find that there are times when we don't recommend professional help, and there are times when we definitely do, and this is one of those times. This can get a little complicated, and the college sends you the 1098-T, but you should have your own records to verify that they're doing it right, and then you can send it over to your accountant to finish off with that 8863. But planning tips: if tuition is due in December, consider paying it early to count for that year's taxes. So this is calendar year, January and December 31st, that calendar year. And your bill may come out as early as the middle of December for your winter semester, which won't start until probably January 10 or 15. You can pay that, well, you have to pay it before you start classes. They won't let you. But you could pay it early, and that's what I'm trying to say here is maximizing your credit. If it's going to help you out, pay it early. Use your 529 plan funds carefully to avoid overlapping with tax credits. You really do have to have a plan here on how you're going to use these resources. When you do the plans that are out there, the 529 and the documentation of the AOTC and the LLC, there's quite a bit of a cash flow going on here that can really help you out. But no double dipping, etc. They already mentioned that. Gary and Chuck did. But so carefully use your 529 plans in the right places. Thirdly, save receipts and that 1098-T form in case the IRS request proof. So that's Gary's last message is keep your own records. Now, updates and reminders as of 2025, the AOTC and the LLC income limits remain unchanged. The IRS has made it clear you must pay the expenses during the tax year to qualify. That was the first little planning tip we talked about. Paying it in December before that winter semester starts. More colleges now include online access to Form 1098-T, which check your school's portal. This as we go digital, more ways than one. You'll find that the colleges have their own sites, and they don't mail these things to you. You have to go get them. They're there, but you have to go get them. Gary, a few more things?
Yes. Yeah, just a quick summary and a few takeaways here. Now, we've talked about the AOTC. Al and Chuck have mentioned the initials. Of course, as an accountant, I had to say the American Opportunity Tax Credit in full. They're the same thing. Okay. Again, the American Opportunity Tax Credit you can only take for 4 tax years, and the student has to be at least part-time, okay? And they have to be pursuing a degree, and they have to obviously have qualified expenses. But you can only take it for 4 of the undergraduate years. And why I emphasize this is I'm going to get into the weeds here, so stay with me for a second here. If you look at a calendar of when the students start school, it's going to be in the fall of one tax year. Then they're going to go through year 2, 3, and when they come to year 4, they're going to be in another tax year. And if you look at it, they've covered 5 different tax years. So if you just say, they're undergraduate, I can take it each year. No, you can't. You can only take it for 4 undergraduate years. You cannot take it for more than that. So that's important. Again, the other item Al and Chuck have said is the LLC, and I've said the lifetime learning credit. You can use it for part-time students. You can use it for graduate school. You can use it for the adult learner going back to school. Okay, the American Opportunity Tax Credit can reduce your tax bill by $2,500. The lifetime learning credit is going to reduce it by a maximum of $2,000. Understand your 1098-T. You don't have to go into a lot of depth, but one, know where to go and get it. It's going to be on the student's portal. Get that 1098-T, include it with your tax information to your tax advisor. And finally, hold on to those records. Now, last, if not least, you want to keep good records about this. Set up a file. Call it educational tax credits. I don't care what it is, but put supporting documents in there that say, okay, this is what I base my deduction on or my credit. So I know this has been long and involved. There's a lot of information here. Listen to it again. Okay.
Gary and Chuck, I just got one question here on that LLC. Just a clarification. So I'm going to exaggerate. So I'm 60 years old and I run into a friend of mine that has a hobby of weaving baskets, and there's a class at the Delt Center. Does that qualify as an LLC?
Well, the thing is, to qualify for the LLC, you got the courses that you take has to improve job skills. It has to go towards some type of degree or some type of certification. Now, if you just go out and take a painting course or whatever, so you could go ahead and paint with no intent to make a profit, you can't take either of these credits. So it has to be tied into a degree and or certification to take the lifetime learning tax credit as well as the American Opportunity Tax Credit. Now, one of the things that I do want to bring up before Gary closes everything out here is covering some issues on the 1098T, which that may be our next week's presentation. Normally on the 1098T, when it has a slot on the 1098T, it's only going to give you the qualified expenses related to tuition and fees. It will not indicate the qualified books and qualified supplies that are available to take the tax credit. And that is the reason when Gary came back in and mentioned that you need to keep good records, go back and get a summary of your total bill that you paid to the college and universities and see how much you paid for qualified books, qualified supplies, and qualified equipment. So just keep that in mind, and if we do a clinic on the understanding the 1098T, we'll go into a little bit more depth on that. So that's all the input that I have for today.
Well, thank you very much, Chuck. Al, also thank you for all your contribution to this. Well, I'm going to wrap it up here. This is, again, prepareforcollege.com, and that's prepare4college.com. We're bringing these to you on a weekly basis. There's a lot more information that's coming down because of changes that are currently in the works or completed already. So stay tuned. For those of you who have friends or family relatives that have children going off to school, give them the website. It may at least give them some things to look at and to consider. It may also give them some ideas as to how they want to pursue the education for their children. Everyone, have a good week. Thank you for your time today. Goodbye now.